Welcome to another swing trading analysis. What we will be doing today is performing a full breakdown on a pair, both from a technical and in order flow perspective. So first, we will see what we have from a technical analysis perspective. Then we will see what we have from an order flow perspective. And by using the combination of these two different types of analysis, we will understand exactly where is the best zone and what kind of opportunity we can be looking for on the pair to be looking obviously to capitalize on the next move. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education analysis every single day on all my platforms. So I really suggest you do subscribe to the channel so you won't miss out on all this free education, and I will see you in the video. The pair that I want to speak about today is Euro GBP. Now, the reason for which I want to speak specifically about Euro GBP is because it's extremely near to provide to us a very interesting swing trading opportunity. So that is why I want to speak about Euro GBP, and also because obviously by performing this analysis, I can provide a lot of free education. So as usual, I will keep the analysis very educational. And what we will be doing is first speaking about the pair from a monthly, weekly, and daily perspective to gain the directional aspect of the pair. Then obviously we will also check what we have from a COT perspective. So commitment of traders, which is what the biggest banks and institutions are currently doing in the market. And we will be looking at how their positioning is shifting. So obviously we will be looking at the institutional order flow, which is the commitment of traders. And then we will go down on the 4 hours. And obviously the 4 hours is the entry time frame, because monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So that is what we will be doing in this video, and without further ado, let's start our analysis. Now, on the monthly time frame, what do we have? On the monthly, we have a market that clearly has just broken a very strong structure level to the upside. What do I mean by this? Now, obviously, it might not seem extremely clear that the market has just broken and retested a strong level of structure, but if we use a quick trick, so we go down on a line chart, we can see that from a structure perspective, the previous resistance, which is now turned support, is exactly this area here. So on the monthly, we have very strong previous monthly resistance, which is now turned support at this area. And if we switch back to the candles, we can see that this is exactly the area that the market has just tested and rejected to the upside, the previous monthly resistance, which is now monthly support at this area. And if you remember from our previous analysis, this is exactly the zone that we wanted to see the market go and test. We wanted to see the market go and test this previous resistance, which is now turned support. Now, what we can also see from the monthly is that we have very strong supply at this zone. In fact, from here, the market had started all this move to the downside. Again, from here, the market started all this move to the downside. Again, the market tested this zone here and got rejected to the downside. And the market lately with this candle rejected this huge area to the downside. One last thing that we can take from our monthly analysis is that if we want informations on a retracement in the market, we have to take our Fibonacci on the impulse. In this case, the monthly impulse is from this low to this high. And if we take our Fibonacci in this way, we can see that the market went for a test of the 0.618 of the Fibonacci taken on the impulse. This is not a mistake that the market did. The market went exactly to test at 0.618 because it is the golden ratio, and it's also the Fibonacci level, which in this case was lining up the best with structure, creating a confluence of support inside of this region that definitely we expected the market to go and test. So keeping the charts clean, what do we have? Now, clearly we have a market that has a very strong confluence of support inside of this area, which it has already tested and rejected to the upside, inside of which obviously the market found strong buying pressure. And we have an area that is extremely strong supply at which we expect the market to go and grab some liquidity. So the situation on the monthly is very clear. We go down on the weekly, and what do we see? Now, from a weekly perspective, we can see that, first of all, the market had created this nice wave to the downside. Now, if you remember, this is exactly what we expected the market to do. After the market had created this candle here, which is the candle that the next one is supposed to fill in the wick, we definitely expected the market to create this continuation to the downside. In fact, if you have a candle like this, okay, which has a red body and a wick, which is as long as the body or even longer than the body. Now, if you have a candle like this, which is obviously the one that we just have drawn here, we expect the next candle to fill in the wick. Now, if you're asking yourself why we expect the next candle to fill in the wick, it is because this wick on lower time frames, so for example on the daily time frame, will simply be a retracement. Meaning that if on the weekly time frame you see a candle like this, you expect to see on the daily time frame an impulse and a correction. So this correction will simply be the wick. And the reason for which you expect the next candle to fill in the wick is because after an impulse and a correction, you expect the market to create another impulse to complete the impulse, correction, and impulse pattern to the downside. I hope that I made myself clear on why after a candle like this, you expect the next one to fill in the wick, because on lower time frames you have an impulse and a correction and you expect a continuation to the downside. And in fact, the next candle was red and it did fill in the wick of the previous candle exactly as we wanted to see. Specifically on the daily time frame, what did we say in this previous analysis? Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos. First of all, we said after this information from here, we wanted to see the market give us a move to the upside, and that is exactly what the market did. And I will link this previous analysis in description. And then again, we said from here, we want to see the continuation to the downside to go and test the monthly support, which is again exactly what the market did. So the market reacted perfectly to what we wanted to see in the first place the market do, because we had clearly said in that previous analysis that from here we wanted to see first a move to the upside and then a move to the downside to go and test our target. And that is exactly what the market did. And then obviously it got rejected to the upside from our monthly support, again, exactly as we wanted to see. And again, I will link this previous analysis in description so you can go and check it out for further reference and more free education. And at the moment, what do we see that the market has just done? The market has just created a very strong impulse breaking above all structure. In fact, where is this structure from a daily perspective? Now on the daily, the structure is here. Now, why is the structure from a daily perspective at this area? Because it was support here, against support here, the market was supposed to find resistance here. However, since we had monthly support and we expected this area to break to the upside, the market broke above the area and this zone is now acting as support. So situation is extremely clear. The market bounced off a very strong monthly support, broke all the structure to the upside on the daily. So what do we want to see? We want to see a retracement and then the continuation to the upside to our overall upside target. And how we will be approaching this situation with students. Now, before I show you that, let's go and give a quick check at what we have from a COT perspective. So commitment of traders, which is what the biggest banks and institutions are currently doing in the market. Now, from a euro perspective, we can see that institutions shifted their positioning completely. In fact, we went from a situation where we had minus 114k net positions with 271k shorts and 157k longs to a situation where we now have way more longs than shorts with basically 250k longs and 54k shorts. Now, what we see with the last report is that some profit taking started on the euro. So we can have some short-term euro weakness. However, in the long-term situation is very clear. We went from minus 114k net positions to 211k net positions and now 196k in net positions. So a clear shift. Institutions have been buying the euro very aggressively. And in fact, for example, Euro USD has been exploding to the upside. And if we go and see what we have from a GBP perspective, what we can see. Now, from a GBP perspective, we can see that we shifted from minus 25k net positions all the way up to 6k net positions. So we went from having way more shorts than longs with 64k shorts and 39k longs to having more longs than shorts with currently 49k longs and 42k shorts, which shows that in the short term, we have seen some shorts getting added. And net positions are not changing anymore, meaning that we can still expect some GBP weakness to continue in the short term. Now, if we go and see what we have back on the chart, the way in which we're supposed to be approaching this situation is extremely clear. If the market will give us a retracement after this impulse, what we will be doing during this retracement. During the retracement to the downside, with students, we will be monitoring price action from a 4-hour perspective, because always remember, monthly, weekly, and daily combined with the COT data are the best time frames when it comes to the direction of the market. But the best time frame for entry is the 4 hours. So instead of this retracement with students, we will be monitoring price actions from a 4-hour perspective. And as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities for the move to the upside and for the market to complete the pattern and go and test the monthly supply. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.